If you're looking at the euro to determine how Draghi did and whether the investors were impressed, the read now is no. Did he make a communications error?
I'm not sure he made a communications error, Sarah. The market was expecting him to do something, so he felt that he had to. The problem is really QE, or this unconventional policy, and the fact that we are certainly in an age of diminished returns. And I find it hard to believe that QE, either in Europe, Japan, the U.S., at this point, will give us sustained growth, or what we used to call escape velocity, without some serious structural reforms getting made. And the U.S. is a perfect case in point. If we want faster growth, we should have a comprehensive tax policy, fiscal initiative, where there is already bipartisan support to get the economy moving. Too much rests on central banks.
Well, that's because, politicians are fighting and they're not getting anything done, and so central banks are the ones left.
But they've made the mistake, though, by taking on the responsibility of trying to get these economies to move, and I think they've gone past the point where it's useful.
No matter what your thought about that is, Kevin, Mario Draghi did manage to stir a rally in European markets, as Simon just mentioned, European banks. This was far and above what the expectations were from him in terms of policy measures to ease. How do you think the reaction is playing out, and how long will it play out, given what Joe just said?
Yeah, I think it has been playing out. I think Joe hit it exactly right. This has been in the market for a little while now. The deliverable came today, but the market has been discounting a move out of the ECB for the last few weeks. And so the strength we've seen over the last 2 or 3 weeks, I think, is at least partly attributable to an expectation for a move. Now you got it, but the point is, and I think Joe hit it exactly right, is there are limits to what you can do with monetary policy. So there was a whole line of questioning, for example, about how far can you go into negative interest rate territory, and the answer is very unclear. The point is that you can't get the economy moving the same way from a 0% interest rate starting point as you can if you're starting at 5 or 10%. So there are limits to what can be done, and there are other reforms that
Kevin,
need to be made.
Just on that point, in fairness to Mario Draghi, what he's saying is the ECB doesn't see any need to further reduce rates beyond March of 2017 is what they're talking about. And then he says, we don't want to further hurt the profitability of the banks by lowering rates. So actually, this is the listening bank. All that conversation that we've been having, or that bank investors have been having over the last 2 or 3 months, the guy is listening to them, which is why you get the response that you do.
Yeah, the moving the rate, you're right. Moving the rate is really going to provide a subsidy to the banks. You've got a large part of that banking system that is now going to enjoy negative interest rates on their loans, and it's going to improve net interest margins. That's going to get there's going to be a multiplier on that based upon a leverage factor. But ultimately, it's going to be the size of the subsidy to the banks times the duration of the time that it stays in place is ultimately going to be what's going to be the subsidy to the banks, and they do need to rebuild capital a little bit here. So this is helping the banking system from that point of view. But in terms of the overall economy, there's a real limit as to what they can do with negative interest rates. That's all I'm saying.